Hey to you all. My name is Kandasamy Thavaruban. I will be discussing about changes to the Code of Ethics, and mainly this is focusing on the students, those who are going to sit for their examination. And I will not going to discuss all fundamental principles. I am going to discuss the changes that has been made to the code. For the agenda will be first exam focus. As a CA students, what are the areas or what are the subjects this code of ethics will be tested. Then we'll be discussing about the new code, that is the overview and what is included and its architecture or layout. Then overarching requirement related to the fundamental principles and independence. Then enhanced conceptual framework using new code and other substantive revisions. Then the effective date. Then basically awareness, adoption and implementation, and additional tools and resources. Now under the new curriculum of CA Sri Lanka, now this code of ethics will be tested in 5 subjects, and their respective subject code and the level of examination and the weightage. Now if you look at audit business process and digitalization, BL5 at a business level, it will be about 15% of marks is awarded for this subject or this area. Then audit and assurance and financial reporting at the corporate level, 15 and 10% respectively. Then advanced financial reporting at strategic level, 5%, and integrated case study, again 5%. Based on the syllabus, now these are the areas that will be tested at the various subjects components in terms of ethics. Now, if you look at audit, business process, and digitalization, as I briefed, is about 15% of marks will be awarded on this subject. Basically, law, ethics, and morality of development, and professional ethics, auditors' independence, and judgmental and ethical decision-making frameworks. These are the knowledge component under this ethics, code of ethics area will be tested from the students. Then advanced audit and assurance at the corporate level, again 15% of weightage given to this, but this code of ethics, which includes another element as well as audit quality. Therefore, I will be discussing only the code of ethics component. Therefore, it's 7.4, where threats to compliance with fundamental ethical principles. Okay. That is section 200 to 270 of the code of ethics. Then auditors' independence, okay, that will be discussing, or that will be tested from the students, those who are sitting for audit and assurance subject at the corporate level. Then advanced audit and assurance, where it will be tested again, 10% of content will be tested from students on the code of ethics. A basic understanding of governance and the ethics. Then at the strategic level, there are 2 subjects. One is on the advanced financial reporting. That is basically, it's a 5 marks weightage on this ethical consideration. That is recent ethical issues, where this will form part of, there are 3 questions being asked on this advanced financial reporting. Question number 1 and 2 will carry about 25 marks. Question number 3 will carry about a pre-scene and 50 marks. Now these 5 marks will be added to either 1 or 2 or 3. Any of these questions, these 5 marks will be added on a recent ethical issues, and test the students' application skill of how the ethical principle in business is applied. Okay, that is all about the exam focus. Now I will be discussing on the changes. Now the new code that is from 2020, Code of Ethics 2020, is replaces Code of Ethics edition for professional accountants from earlier version of 2016. Now the major changes were basically NOCLA pronouncement, that is responding to non-compliance with laws and regulations. Then changes to the code addressing long association of personnel with an audit or assurance client. Now this I will be discussing later on in detail. These are the major changes that has been happened. Then changes to the part C of code addressing preparation and presentation of information and pressure to breach fundamental principles. Then if you see the new code, it is more user friendly. There are about 4 parts. Now we can go straight to the relevant part. Now some parts may be relevant to professional accountant in practice. Some part may be relevant to professional accountant in the business, and some part may be applicable to everyone. Therefore, it is more user friendly, and the new design that is very easier to navigate and use and enforce. As I informed, if you can go back to the relevant area, easily you can navigate it, and you can get the fundamental principle laid down at the Code of Ethics. Right? And this is from IFAC, ISBA board. This has been a complete rewritten exercise has been carried out, and requirements were clearly distinguished from application material. Now, later part of the session, we will be discussing materials, the relevant materials where students can go through and they can familiarize themselves from ISBA. Therefore, this is very clearly distinguished from the application material. And new user guide and updated glossary. Now, they have given the glossary for abbreviations and the terminology used in Code of Ethics. Then increased focus on compliance with fundamental principles. Now in future we will be discussing as FPs, fundamental principles, and independence as overarching requirements. Now independence is the fundamental requirement when we're dealing as auditors or when we're providing assurance services. So that will be discussed. Then enhanced conceptual framework, CF. That is, now the conceptual framework will give the foundation of how these all Code of Ethics were developed. Now it's very clear and more robust safeguards in relation to conceptual framework, and more tightly integrated into relevant section of the code. Now this requirement, conceptual framework, that has been integrated into relevant sections of the code. Now, as we discussed, with this new code, this is very comprehensive, very user friendly, and very integrated. And as I said, it's more completely rewritten and includes significant enhancement to the conceptual framework and enhanced safeguards, provisions better aligned to threats. Then normally when a professional accountant in business or maybe professional accountant in practice will always come across threats. Therefore, it will give if you identify a threat to Code of Ethics or the fundamentals, then how to deal with that threats, what are the safeguards available, then how to come to a conclusion by using the facts and the circumstances available on that particular scenario or instance. Then strengthen long association provisions. Now, basically, when you consider as auditors, when you deal with clients as an auditor or maybe a assurance service provider, now if you have a long association with the client, how do you deal with that long associations? Especially in terms of PIE clients, public interest entities. Then strengthen provisions regarding preparing and presenting information. Basically, again, when you come back to auditors, now whether are we as auditor, what is your responsibilities in terms of auditing, whether you are going to preparing and presenting that financial information, or whether how you are going to tackle the management responsibility part of it. Then new provisions addressing pressure on breach of FPs. Then NOCLA, then applicability of relevant professional accountants in business, that is PIB. Then professional accountants in public practice, those who are engaged in auditors, as auditors in audit practice, and those who are identified as professional accountants in public practice. Now, some accountants may be in the business as a finance manager, accountant, head of finance, CFO, general manager finance. Now, these people might be known as, these professionals might be known as professional accountants in business. Now, that requirement was a little bit clarified. Strengthen provisions regarding inducements, new guidance regarding professional judgment and professional skepticism. Now, these professional judgment, skepticism are already defined in the auditing standards. Now, there are new guidance on this area. Now, as I discussed at the beginning, now this consists of 4 parts. Part A deals with complying with code, fundamental principles, and conceptual framework. Now, this is about part 1. This is applicable to all professional accountants. Those who are professional accountants as part of members of the institute. Now, everyone should comply with this requirement. Now, part 2, professional accountants in business, PIBs. Now, this section applies to those who are in the business as account professionals. Our CA members can be in the business or mercantile sectors. Then they should be see the guidance given under this part 2 of this code of ethics. Now, part 3, professional accountants in public practice, PAPPS. Now, this is, as I discussed, this is in relation to the auditors, audit firms and chartered accountants, those who are engaged in auditing of financial statements. Now, then those kind of professionals should adhere to this part 3 of this code of ethics. Then part 4 and 4B, that is international independent standards. Now, independence, when you engage as a professional accountant in public practice, then you should comply with the independence. This is one of the fundamental in our profession. Therefore, now this also divided into 2 parts. Part 4A and Part 4B. Part 4A dealt with independence for audits and reviews of financial information. Then Part 4B, independence for assurance engagement other than audit and review engagement. Okay. Then at last, there's a glossary to give that is again applicable to all professional accountants. Now, therefore, as a students, we should be knowing that part 1 will apply to every professional accountants. Part 1 and 2 will be applied to PIBs. Then part 1, 3, 4 will applies to PAPPS. The glossary will apply to again everyone. Right? Now, the conceptual framework, if you see professional competence and due care, then integrity, objectivity, confidentiality, professional behavior, and independence. Now, these were already there in the existing code as well. Therefore, these are the requirements to be a professional accountant, has to be complied with ethics. Then categories of threats. Now,
Thavaruban cannot hear.
Sorry. Okay. categories of threats: self-interest, threat, then self-review threat, advocacy and familiarity, and intimidation. Again, these were the same threats were there in the old code as well. Then the enhanced conceptual framework. We have discussed about there was an enhancement in the conceptual framework. Now, basically, if you come across as a public accountant in a business or public accountant in the professional practice, now wherever you identify threats, then you have to evaluate the threats, and then you have to address the threats to minimize to an acceptable level, right? Now, in this all equation, we may have to consider our professional judgment. Now, dedicated provisions that apply to all PAs, professional accountants, in all circumstances when dealing with ethics and independence issues. And we have a conceptual framework. Sorry, why do we have a conceptual framework? Because of establishing an exhaustive list of facts and circumstances that might trigger ethics and independent issues impracticable. Normally, this conceptual framework will give a foundation on which this code has been developed. Right? Identified threats must be addressed in one of three ways. Now, as I discussed, in a professional accountant might come across threats while he performs his duty either as either professional accountant in business or professional accountant in practice. Now then, when you get a threat, then we have to evaluate it and we have to keep it in a level that can be acceptable. Now, how we can address these threats would be either eliminate the circumstances creating the threats. Now, then we have to identify what has created that threats of independence or threats to this code of ethics. Then apply the safeguards. If you identify the threats, then you evaluate, then you have to then you have to see what safeguards could be applied to keep the threats to an acceptable level. Then the third could be decline or in the specific professional activity or service. Therefore, now if you, after doing the first two activities, what is the eliminating the root cause that has created the threat, or after applying the safeguards, still as a professional accountant believes the risk cannot be mitigated, then the professional accountant should decline that professional activity or he has to terminate it. Then safeguards and reasonable and informed third party, RITP, and other key concepts clarified. Now, safeguards now more closely correlated and identified threats. Now, the safeguards were linked to identified threats. Sorry. Then emphasis that if threats cannot be addressed, a public accountant must decline or end the specific professional activity. Now, more important thing is public accountant, either in a business or professional practice. Now, if he cannot eliminate or if he cannot keep that threat to acceptable level, then the option is that PA must decline or end the specific professional activity. The new requirement to PA to step back and forming overall conclusion. Now, more importantly, when you come across these threats, safeguards, then you may have to, when you come to an overall conclusion, you have to step back and make a proper evaluation. When you do that proper evaluations, you may have to consider RITP test. That is a reasonable and informed third party test. If in a simple term to understand for a student's perspective, now if this scenario is happen to another third party, whether that third party, by knowing the facts and the circumstances and all the information available, will come to the same conclusions that you have reached. Now that is called reasonably informed third party test. Okay. Then using new code, now users basically we will going to use this code for sure. Students will use this code for their examination and get through their hurdles. Then members of the institute, either they are in business or they are in professional practice, they will use this code of ethics. Therefore, users are required to know and understand to apply this code. Now, all provisions in part 1, that is fundamental principles and conceptual framework. Then the relevant section which contain incremental contextual provisions to assist proper application of conceptual framework, the guidance. Then new headings and emphasize scalability, applicable in all circumstances, that is they call general. Then to all audit clients, that is PIEs, that is public interest entities. Now again, public interest entities also defined under this code as a glossary. Basically, it is a listed entity or it is regulated by regulations. Then that is normally known as public interest entities. And then non-PIEs in section 600. Then audit client that are not PIEs, audit clients that are PIEs. Now, these are emphasized in this new code, how to deal with these circumstances. More comprehensive provisions addressing PAIB's responsibilities when preparing and presenting information. That is a professional accountant in the business. Then prohibition on exercising discretion when preparing and presenting information with the intent of mislead or inappropriately influence contractual or regulatory outcomes. Now, professional accountant in the business, make sure they comply with the code of ethics, whereby a fair presentation of financial statements, the financial performance and the financial position of the company being published to the stakeholders. Then enhance guidance to assist PAs in disassociating from misleading information. If you get a misleading information, how to disassociate, how to deal with that misleading information also, there are guidance provided in this code. Pressure to breach fundamental principles. Now, sometimes professional accountants might get various pressures, various instructions, orders from their subordinates or superiors to do certain things that will not give a better presentation of financial performance as required by the standards. Therefore, how to deal with this pressure to breach fundamental principles. So basically, prohibition of allowing pressure from others to result breach of fundamental principles. We have discussed fundamental principles. Because of your boss or your owner or your employer request certain things to be done, now that is result in a breach of fundamental principle. Now, how to deal with that? Then prohibition of placing pressure on others that would lead them to breach fundamental principles. Now, the first one is you are getting orders to breach the principles. Second one is you are giving orders or directions to breach that principles. Then how to deal on that scenario. Then guidance to assist navigating situations involving pressure. Now, if you get various pressures, how to get a guidance to get away with that situation while complying with your ethical behavior or code of ethics. Then practical examples to illustrate different situations in which pressure might arise. Now, there are examples given, practical examples, how to or various or different situations, how do you deal with that situation? PAIBs and PAPPs, inducements including gifts and hospitality. There are clarifications about appropriate boundaries for offering and accepting inducements. That is, then the prohibition of offering, accepting inducements with intent to improperly influence behavior. Now, sometimes professional accountant, in practice, you might get various hospitality gifts. Then as a professional, then you may have to see and assess appropriately whether that gifts or hospitality will result harm to your professional behavior, that will influence your professional behavior. Therefore, then a critical assessment of that gifts or hospitality has to be evaluated based on the circumstances. Then application of CF when no actual or perceived intent to improperly influence the behavior. Then PIB and PAPP's provisions are strengthened in relation to inducements, including gifts and hospitality. Then confirming changes to the independence provisions regarding gift and hospitality. Again, professional accountant in practice, example, if an auditor, if you get gifts or hospitality, then that might cause a concern over independence. Okay. Now that changes were brought in. Then long association. Strengthen the general provisions addressing long association. That is, as an auditor of a PI, how long you have associated with that client. The longer you associated with a client, the court says there are threats of familiarity or self-interest. Therefore, current requirement is all PIE audits, that is public interest entity audits, a 7-year time period. Then revisions also, there is no change. A key audit partner or the engagement partner, that is 7 years. Then cooling off. Currently, it is about 2-year cooling off periods for all key audit partners or key audit persons. Now revised for engagement partner, it is 5 years cooling off period. Then for EQCR, engagement quality control reviewer, or some firms might use various terminologies. Therefore, that EQCR role partner, that is cooling off, is 3 years. Any other key audit partners, cooling off period is 2 years. Therefore, 532. Currently, which is 2 years. Now, this revised code of ethics that brings this change. I will be discussing when this change will be effective. Restrictions on activities during cooling off. Continuing prohibition on consulting with engagement team or client regarding technical or industry specific issues, transaction or events. Now, during this cooling off, the EQCR, key audit partner and engagement partner is prohibited to deal with incoming engagement team or client regarding any technical or industry specific issues other than common accounting issues. Then, but new restrictions. Acting as a client relationship partner. Sometimes in practice, on top of engagement partner, then key audit partner, EQCR, there may be a designation or there may be a role called client relationship partner. Now, there are restrictions on this acting as a client relationship partner during the cooling off. Then undertaking any other role or activity, including providing non-audit service, NAS, that would result in individual having significant or frequent interaction with senior management or those charged with governance, directly influencing outcome of the audit. Now, during this cooling off, again, either engagement partner or EQCR or key audit partner should not involve by providing any non-audit service, where that will result significant or frequent communications or dealing with the senior management or those charged with governance, whereby that directly or indirectly influencing the outcome of the audit. This is a key change in relation to this cooling off and the activities that is prohibited during the cooling off. Non-assurance services, new and improved guidance to assist proper application of CF, new factors to evaluating threats, enhanced guidance on addressing threats, including revised safeguard provisions. Prohibition on assuming management responsibility now more prominent. Now, new code say strictly you can't assume management responsibilities, right? Then existing prohibitions on provision of certain types of NAS, non-audit services, in certain circumstances retain, but new prohibition recurring services. Okay. There are certain prohibitions in terms of providing non-audit services to existing audit client. Recurring services, enhanced general description of recurring services, clear guidance regarding types of recurring services prohibited, new provisions to help avoid assuming management responsibilities when providing recurring services. For example, if you're providing similar to information technology, IT related services or internal audit, then prohibition of providing certain recruiting services now applies to all entities. That is a professional accountant practice. You can't provide recruitment services if you are carrying out audit, right? Searching for or seeking out candidates, undertaking reference checks or prospective candidates. Then applicability of PAIB's provisions to PAPPs. Now, clear guidance for PAPPs that relevant PAIB's provisions in part 2 are applicable to them when they perform professional activities pursuant to their relationship with the firm. Whereas contractors, employees or owners of the firm. Then there are illustrations of situations in which provisions in part 2 apply to PAPs. Okay. Now, basically, in an audit firm where a chartered accountant is a head of finance or finance manager, then he deemed to be a PAP in a PAIB, right? Professional judgment and professional skepticism, new guidance for all PAs to emphasize the importance of obtaining an understanding of facts and circumstances when exercising professional judgment. Now, there is a new guidance to make awareness how it is important when we are making professional judgment. For auditors and assurance practitioners, that explains how compliance with the fundamental principles support the exercise of professional skepticism. Again, when you may as a PAPPs, when you comply with this code of ethics, then how that will support of exercise of your professional skepticism. Then effective dates, part 1, 2 and 3, where that has already in force 1st Jan 2021. As of 1st Jan 2021, this is effective. Part 4, that is independence, that is financial period commencing from 1st Jan 2021. Then long association. Now this can be early adopted. Early adoption is permitted. A long association provisions, that is financial period commencing from 31st December 2025. That is, I have discussed about this partner rotation and the cooling off. Now that is deferred to a later date. Now all others will fall effective from 1st Jan 2021, but whereas this is deferred for another 5 years, the long association provisions will kick in on from financial period beginning 31st December 2025. Right? Additional tools and resources. Now there are flyers, there are bases for conclusions. I encourage you all to go and read this basis of conclusions, and there are webinars. IFAC or ISBA conduct these revisions as webinars. I think these are all free of charge. There were 2 webinars were already completed. One is on fees, other one is on non-audit services. Students were encouraged to listen to these webinars because these webinars were conducted by professionals or experts, those who are involved on developing these ethical standards. Then more importantly, it is good to read the basis of conclusions as well. Then more things will become in near future. We can always go back to the ethics board on this link, and students can learn and read and understand these new changes to the code. Thank you.